Welcome to Second Take, the show that focuses on the issues behind the news. African Rainbow Minerals has defended its decision to build a $328 million manganese alloy smelting facility in Malaysia, saying it is not abandoning local beneficiation. Mining Weekly editor Martin Creamer tells us more. Hi Martin.
Thanks, Chanel.
Can you tell us a bit more about the facility and which parties are involved in its development?
Yes, it's a South African, Japanese, Chinese venture, and it's based around the high quality of our manganese and the fact that, Assmang, with whom African Rainbow Minerals is associated, has the supply of that manganese. So it's in Malaysia, it's in a new park there, and it's getting fed by lower cost electricity from a hydro plant. And the deal is that they've got a long-term electricity supply, which makes it a venture that is viable, and also something that is preferable in a place like Malaysia when compared with South Africa, where we've got this higher power price problem. And this company, Assmang, does have its ferro-manganese smelters in Cato Manor, but those are running into problems because of the power costs, because of the fact that they're no longer modern. And this gives them an opportunity now to keep within the integrated space while they mark time, hopefully to come back to South Africa with a bigger plan that comes with extra research and development to make it more feasible.
What did ARM's First Division Chief Executive Jan Steenkamp have to say about making the decision to build the plant and the reasons for that decision in Malaysia?
Yeah, no, he presented a very compelling case. I mean, he had to defend his position at the latest presentation of results of African Rainbow Minerals, and he did so with aplomb because, you couldn't defeat his argument. It's all very well saying that, you should beneficiate at home, but it's no good beneficiating at a loss. I mean, nobody's going to approve of that. And in going into Malaysia here, it's like a bit of a dripping roast. The risk is low. They've got good partners. They've got an off-take agreement of, 30,000 tons a year of the output of 160,000 tons, plus more from Sumitomo, which is also going to manage the project. So it's like an offer they can't refuse.
The company posted 8% higher headline earnings for the financial year ended June 2013. What were some of the other financial and operational highlights?
Yeah, and they were sort of counter-cyclical. It was almost like a salmon defeating the flow of the water. They came through with results which one expected to be less fancy, particularly the dividend that they declared as well. So the company, African Rainbow Minerals, turned around its nickel operations, its platinum operations, and these added dramatically to the bottom line, enabling it to give these 8% higher earnings. But, they do want to beneficiate in South Africa, which is what we've been talking about. They don't want to abandon that idea. So they're actually engaging in a lot of research and development in Pretoria at the moment, and that hopefully will be applied closer to the source, they say, which means closer to the mines that they've got in the Northern Cape. One hopes that comes through. But if you look at what is happening at Metalloys in Malaysia here, that's the Semancor company, which is a venture between Anglo-American and BHP Billiton and managed by BHP Billiton. You saw them put R1 billion into their ferromanganese smelter. They're not saying it's better to do it in Malaysia, which is quite an interesting thing. And what is the difference there? The difference is that, Semancor at Metalloys in Mayerton, just down the road, is co-generating power. It's got a nice little power station there where it uses its off gases and it converts it. It uses that as a fuel for electricity. But the stunning part of it is the ultra low cost of that electricity. It's coming through, I think, at 1 cent a kilowatt hour. That is unbelievable when you think of Eskom going up to 62 cents kilowatt hour, 70 cents. So what I'm trying to get across is that the business case is developing for these energy intensive smelting operations to look to generating their own electricity. They seem to be able to do it. Well, certainly in Mayerton, just down the road here, we're seeing it happening far more competitively than Eskom is able to supply them with electricity. And this has been the business case that has set a beneficiation project on the go, very close by, also relying on rail. But when it comes to beneficiation, it is more of an economic proposition to rail higher value goods than to rail that low cost ore. We've got fantastic manganese. I mean, people who come in, foreigners, tell me, you can only dream of this quality of manganese. So really, South Africa has to sit down and say, look, we can't have this situation where we can't go ahead with certain projects locally, which should be done locally, and we can see competitors are doing them locally because of this high energy situation. Let's allow these independent power producers to come through, because it seems as though they'll be able to do the job at a lower cost. That will create this value add, and there's nothing that puts a bigger smile on the face of South Africans, and particularly the Minister of Mineral Resources, Susan Shabangu, than local beneficiation, because the cry is for this. Let's add some value to our metals and minerals. But people have been saying, we'd love to, but who's sabotaging all this? It's the state-owned enterprises. Eskom can't come forward with the right level of power cost, power price, and Transnet is unable to deliver. This needs to be turned around. And if we are going to have beneficiation, it has to have a good business case. But in the case of manganese, Australian participants in manganese mining in the Northern Cape have said to me, you've got the best manganese geology there. And you can see also in this deal with Assmang, which is the partner of African Rainbow Minerals, they've got these Chinese and Japanese coming in. What are they really after? They're after that high quality of supply. So we should be playing on that. We should be doing much more. We've got a manganese treasure trove here. It's got 80% of the world's manganese, and it is inland, which is the problem. We need that rail, but it also needs, if we're going to add the value, competitively priced power. We need to be competitive in South Africa. That's the story. If we're competitive, we'll be able to add this value, and hopefully in the future that'll come through.
Thanks for chatting to us, Martin.
It's a great pleasure, Chanel.
That's the Second Take show for this week. Thank you for watching, and join us again next time for more news and insight into what's happening in the mining world.